Hi everyone, we're just working our way through a very busy week of earnings this week. I think we always thought that the US refiners could produce some negative surprises in terms of the amount of turnaround that we saw in Q1. At one point we were actually below 2020 levels of throughputs. We got that much turnaround on the Gulf Coast, and as a result you're seeing some issues with turnaround costs today at Marathon Petroleum, which has just been on fire. So that's giving back, some of what it's taken, and deservedly been awarded by the market actually, and no problems there. Just a step back on a tough Q1 relative to expectations. And Phillips similarly had pretty weak results, which is more of a structural issue for Phillips because of their operational costs and the need to sort out their operations. And so it's more of a concern that Phillips had poor capture in Q1. That, of course, is all going to turn around. The problem that we've got now is that we were focusing on distillate demand, and that is looking quite weak, actually, in the US. It's always a volatile series, but if you look at what we've seen from the trucking companies, they've been quite negative, and the apparent demand in the US DOE data has looked distinctly rough, actually. So distillate's a bit of a concern for us. Having said that, gasoline is acting very well. And so net, we're still in a good refining environment. And I think we're still comfortable with the oils going into Memorial Day. It's just the pause that refreshes here a little bit. As we see this distillate weakness, we've got a little bit of weakness in Europe similarly, and rising distillate inventories globally are a little bit of a concern for the oil market if we're going into an economic slowdown, which we probably are. But in the meantime, naturally, seasonally, everything keeps going, and we continue to think the oils are a good hedge against inflation. Elsewhere, we did a note which got a lot of interest on Exxon versus Chevron, just deconstructing the two CEOs' performances on CNBC on Friday. Both companies' CEOs did an outstanding job. I was actually highlighting what CEO of Exxon surprised me with, which was his response to a wildcard question at the end of his segment on the issue on college campuses, protests on college campuses. And I just thought Darren Woods, who was very straight and unsmiling, but very correct in his performance, gave a really excellent answer to what he thought of the situation on college campuses, which I was like, I can't believe they've asked that question. But in the event, he killed the answer, which was essentially that Exxon strongly supports diversity of thought, wants diverse thinkers in the organization, but at the same time you need respect and tolerance essentially to be able to have a full and open debate. And if you move into harassment and intimidation, Exxon doesn't want to be involved in that kind of behavior in any way, won't hire somebody who's involved in that kind of action, and ultimately won't hire from a campus where they believe that kind of harassment and intimidation is tolerated. So it was a pretty powerful answer. As I say, both CEOs did a great job, I thought, of talking through the relative merits of their companies, whilst, of course, there's this incredible tension. These were separate interviews, of course, but there's an incredible tension between them over this situation in Guyana, which is going to run for a few more months for sure, because we're in arbitration. The Exxon CFO was confirming to analysts yesterday that they're still in the process of finalizing the third arbitrator, and that would then, from that point on, the arbitration will take as long as the arbitrators want, but it should all be done within 6 months. So we should be getting an answer on who's the winner of Hess, or at least whether Chevron wins Hess, before the end of the year. In the case of both Pioneer and Hess, the companies Exxon and Chevron respectively are planning analyst meetings after the deal's complete. So in the interim, whilst their guidance is still fairly clear, the full sort of digestion of what these companies mean for the company's outlooks, which is a very big deal because they both represent significant growth for Exxon and Chevron respectively. We'll have to wait until post the deals completing, which I think will happen this year. Generally speaking, Exxon Chevron we think are in excellent shape. Conoco will be reporting tomorrow. We think they're doing a great job as well. The market is being tough on companies that miss, but ultimately all of these guys with oil towards 90 Brent should be doing very, very well. The group that's surprising us to the upside, which we don't support, is definitely natural gas. And we understand that people are dead keen to buy natural gas. We wrote a note what was it now, a month ago or more on Virginia power markets and concluded that that would be very bullish for gas demand. Suddenly everyone's buying gas stocks again, even though we think the outlook for natural gas markets is rough this year and just as rough next year. So we're not into that gas trade. We do support the refining trade, which has wobbled a bit here. I think we were concerned about Phillips' results just because of the implications for how long it will take them to turn around their operations. But ultimately, we do think that things should be fine into summer with the economy as strong as it is, even if distillate is looking weak. We're still not big on service, and I think we still generally like midstream companies a lot, and those are all doing absolutely fine in this results season. So things continue. I think we're looking at a pause that refreshes here. All of us on Wall Street are very worried about government debt and the 10-year, and that's going to be the driver of the market. There's no reason why it wouldn't be. And it's difficult. I think everyone expects it, the T-bill to go through 5% yield and maybe more, and that's going to be bad for the wider market and relatively good for the oils, which will be traded by the macro traders as an inflation hedge. Okay, let's have a quick talk about the garden because I wanted some internet advice. I planted up St. Francis, and he's actually running right now, so he dribbles water. I made that fountain. I'm pretty proud of that. But the question I had for the internet is, how do you grow asparagus? Because you might remember a couple of weeks ago, I was highlighting my asparagus plant. And I don't know what this is. That is an asparagus plant. I have no idea what to do next. It's bent over and it's got lots of little asparagus stalks, but I have no idea what I'm doing. Anyone who knows anything about asparagus growing, feel free to comment below, subscribe, share. Thanks a lot.